Well, hey there, everybody, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a critically important range of topics, and he's going to be basically today we're going to be picking up where we left off from yesterday because we had so much material to cover we didn't even get to half of the agenda. So that's going to be the focus today. And so what am I talking about? Well, Roger's going to be talking about why short-term trading can be so mentally taxing. There's definitely an emotional content there or aspect to that he wants to talk to you about. He's also going to share what his top stocks picks are today and the options associated with those. And then he's going to dig right into the mailbag where a number of questions have come up over the past several days, including, hey, Roger, do you trade options or futures or both? How far do you go out on options when you select an option? Should we be using limit or market orders? When to stay away from day trading? That would be some good advice. How does implied volatility play into day trading? Choosing a delta on option and how it can shift. And one that he added from this morning's session is what do we mean when we talk about 90-10? So these are the things that we really hope we're going to cover today. It's critically important information, and we're addressing questions that you have asked of us. Now, if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as not to interfere with Roger's presentation whatsoever. Now, in this morning, as you know, for those of you that join us at 8 o'clock every day, Roger likes to talk about what's the overall theme of the market before we dive into some of the specific catalysts and stocks. And the theme today coming in was that the markets were, slightly down. It was a slightly down day with no directional bias basically across the board. He felt that if we were going to see any volatility today, it most likely would happen after the PMI reports were issued at 9:45 a.m. Eastern Time. In looking at gold and crude and bonds and the US dollar, they were all flat and just giving no real impetus to the stock market. Also, we noted that choppy markets were causing heightened sector rotation, and we had a great discussion around, when do, sectors rotate and what causes that. And Roger spent a fair amount of time talking about the way things were maybe a year ago, as opposed to where they are today, where we're seeing section rotation almost on a daily basis. He also felt that, keeping an eye on the bonds and to pay quick attention to them to see how they responded after the Philly Fed manufacturing data came out and after the PMI data. Because as you know, Roger, he likes looking at the bonds as being the number one thing that potentially has the impetus to move the stock markets. And we also want to give a special shout out to Cheryl Duttler, who said this, quote, so we have low volume, low volatility, and no institutional buying. And basically, Roger said, Cheryl, you have just summed up the day. Now, as far as catalysts are concerned for today, once again, props to Richard Del Mastro because he nailed it. And you know what we mean by catalysts. We're talking about information that is known, but has not yet been priced into the market. So what things do we need to pay attention to? And Richard listed these and he hit it out of the park. Number one, the Philly Fed Manufacturing Index, the Flash Manufacturing and Services PMI, existing home sales, and in particularly Walmart, Hewlett Packard, and Baba earnings. Those were the key things, and he nailed it. It's exactly what Roger had on his list as well. So once again, Richard Del Mastro, thank you so much for your contribution there. Now, when it came to small caps, Roger leads off the morning and he says, hey guys, this is what we've got on my small cap watch list. I'm going to go ahead and put that here so that we can all see that. And I'm putting this in the chat panel. And you can see that the ones that he was focused on today are AEMD. And he said, look, if it moves above $2.25, that would be the place to get in. And we're talking about going long. And then the other one was GRO above $2.40. So those were the focus. And guys, just as a reminder, once again, selecting small caps is a function of price action and volume. It's not dependent on what the broader market is doing. And also, as a caution, all this information that Roger sees, the price action, that's pre-market, but you should only be looking to trade these instruments during the regular market hours. Now, as far as Roger's daily stock watch list is concerned, I'm going to go ahead and post that for you because there are several stocks that are on his short watch list and his long watch list, and you can see them posted right there. The thing that's important here, once again, is that Roger just doesn't spit these tickers out. He brings up the chart for each one of them. He shows why he likes them. They're trading below or above the American flag. They're above a key area of support or resistance. But in all cases, he basically is saying, make sure that you're convinced that they're in a solid breakup or breakdown before considering going long or short on these stocks. And I'm always interested to determine, to find out midday during the VIP session whether he feels the same about some of those. So, once again, folks, for those of you that are joining us today, we've got a great agenda. This is a follow through from yesterday. We couldn't get to everything yesterday, but we're going to finish up today. Roger's going to be talking about why short term trading can be so mentally taxing. He's also going to share his top stocks and the options associated with those. And then he's going to dig right into the mailbag and talk about, hey, Roger, do you trade options or futures? How far out do you like to go with options? Should we use limit or market orders? When should we stay away from day trading? How does implied volatility play into day trading? How to choose a delta on options and how it can shift. And then a new one that was added just today from this morning. A lot of people were asking people, Roger, when you say 90-10, what do you mean? So with that, the table is set. Let's get rocking and rolling. Roger, good to see you, my man. How you doing?
Good to see you too. Good to see you too. How are you today?
I'm doing great. I am doing just great, and I'm excited. I'm always excited to be with you, Roger, because this is the markets are not Groundhog Day. Every day is different, and I don't care how long you have been looking at the market. You've been 31 plus years, and every day there's something new or different, that we need to take advantage of or be careful about. And so it's never boring. It's never boring at all.
I'll tell you, it's always something going on with the market. Even when it's boring, it's fun. Let me go ahead and let me just make sure I got everything here going on. Oh, let me share my screen. That's why YouTube is not working. Oh, also yesterday, I think we forgot to turn off YouTube. Just
I
FYI, like 10 minutes after, just heads up.
Yeah, I got it. I
Yeah,
did.
just make sure
Maybe a
that
little sooner. Okay, gotcha.
yeah, or give it 10, 15 minutes, just as long as the pitch does. Anyway, you'll figure it out.
Yep.
Anyway, folks, some folks I saw somebody was asking me about CBRE. No, I have CBOE and I have CBRE on my list. They're both on my watch list. I know it's a little confusing, right? Because it's
Yes.
CBOE, that's Chicago Option Exchange. And then I have CBRE. So they're completely two different companies, but they both happen to be on my watch list. And I gave them interchangeably. And to make it even more confusing, I gave a trade yesterday on CBOE. But they are both on my watch list. I just want to make sure you guys understand that it's not an error. I like them both right now. Okay.
Yes. And I
Yeah.
can see how it's easy those letters can just run together.
Oh, let me tell you, Raleigh, I could tell you some nightmares about that. Like, what's a tip? I mean, a common one that APH, AHP, or you know what, the one that always gets me, AMD and ADM.
MADM, I
I
can see
mean,
that.
if you'd say them all the time, you don't have to think about them, and
Right.
it's like and then it's even worse because you're like, oh, wait a minute, what did I just say? So yeah, it happens sometimes, but they happen to be both on my list. I just want VRT and VST Jill all the time. The usual suspects, and by the way, it always happens to the same group of stocks. It's not like I do it to. So if you've been with me for a while, you probably already know my idiosyncrasies,
Idiosyncrasies. There you go.
I don't even get to say.
Easy for you to say, you know?
Yeah, there you go. Yeah, but so folks, real quick, just real quick before I get into the meat and potatoes, I just want to emphasize that we are right now in the deepest of the depth of summer, and but I want to show you something interesting. And Raleigh, this is interesting. Look at the levels. I drew these levels for you guys in the morning today.
In the
Okay,
morning,
these are
right?
my intraday levels. Okay, so take a look at these levels down to a
Yeah.
tick, right?
Yes.
Down to a tick, not a tick, but
Tickled it.
all
Yep.
close, right?
Yep.
Close. Look at that.
Yep.
Look at that. And look at
Yep.
that.
Yep.
And folks, you can't tell me that I drew them after the fact because I was doing it in the morning while you guys were all here about on
Mhm.
live on camera at about 3 hours, 4 hours ago.
Mm.
So we can't pretend that it's all happening.
Mm-mm.
Um, we know you well enough to know when you screwed up. Exactly, Wesley. That's See, one thing about me, I'm very consistent. I'm very consistent. Now, for some reason, oh, there we go. I didn't see myself on YouTube. Now we're on YouTube. We're all good there. So, anyways, let me say hello to everybody, and then we will begin. And then I want to get through. We have a lot to talk about today. So let's start off with. I always want to say hello to everybody. John, Robert, Steve, Richard. No, Richard Feinberg, CBRE and CBOE. It's a double whammy. Arnolfo, Sandra, RV Hanning, Cyrus Jill, Laugarafalo. Hello there. And if I mispronounce, I apologize. Jody, James, iPhone, Jason, Pete, yeah, Raleigh does a great job. Christopher, Wesley, Peter, Jill, John, Ivano, Wesley, Cyrus, Carlos, Sergey, B-Rat, Scotty, Gus, Shannon, Jim, Mike, Jeff, Alan, Vernon. Good morning, Vernon. Rain Dog. How are you, Rain Dog? Matt, aloha, Catherine, Barbara. Yeah, Barbara saw me do it this morning. Michael, Jim, Christopher, Chris, Todd, Barry, Bill, good morning. And on YouTube, it's very fast. Kevin, Steve, Bill, Jason, Dex, and Steve. Greetings, greetings. And I still can't believe we're already on Thursday. The Fed data, we had data today. Everybody
Yeah.
was waiting for the purchaser managers index to show that there's been a real big increase with the tariffs. None whatsoever. None whatsoever. The thing that I don't like right now, what I really don't like is this. And this is the daily side right here. You could see my mouse moving quickly. You could see right here that the bond market is coming down to this level.
Mhm.
Bonds going down is not good for interest rates.
Right.
Okay. Bonds going down is bad for interest rates. Bonds going down means yield goes higher. Okay. So when bonds go down, interest yield goes higher. And it's a complete 180% inverse. It's not maybe could be. It's directly involved. So, hey, Frank and Kurt, good morning, John. And Matt is here, I think, in the background. He's just recovering, but he's working today. He put on a couple of trades. So my point in saying all of this is these are those crazy levels that I draw, right? The daily levels. These are the intraday, but this is the daily. And if we hit this level, see how we kind of almost bounced at this level.
Right.
If we traverse this level, it's going to get hairy. The good news is there's three levels of support here. So,
Mhm.
but I would be my point in telling you this, folks, is and Raleigh is that I want folks to understand that tomorrow, if the news doesn't come out as good as people want or whatnot, keep an eye on the if we break basically to make it easy for you, so you don't have to write this down. If we break the 85, the 86, if we break the 86 level on the TLT, and then if we break the 85 level, those are the two
Yeah.
levels.
Katie
But the
bars of
key
the day.
level right
Right.
now is 80,
Mhm.
86. That 86 level is like, if we break 86, really break 86, that means on Monday, interest rates will be higher. And
Yep.
that's a guarantee. I mean, Tuesday interest rates will be higher. That's a guarantee. That's not maybe could have, would be, should have. That's a fact. Another thing that's dangerous right now and why I'm trying to hold trades to a bare minimum is because right now the volume is, I mean, it's tiny. Yesterday we had really good volume. Yesterday market internals were not that great, but the volume was great. Today we have no volume. I believe the volume is really low for obvious reasons, and those reasons are that everybody and their mother is uh, is waiting is waiting to is
To hear,
waiting to see what
are
happens
they
to.
waiting for Jerome tomorrow? Hear what
Yeah.
he's going to
Y-
say, right?
yes.
Nine
Sorry,
o'clock
I'm
tomorrow
just
morning. Yep.
I got a couple of things going on here.
Yeah. Or I guess 10
Folks, if I'm
o'clock
doing
tomorrow
something
morning.
else, like looking here, I'm just doing this for your benefit. I just want to make sure nothing gets past me. Greg says, how much control does the Fed really have on interest rates? They said the overnight interest. Um, um, a lot, Greg. A lot. Good question. Hey, Hefe, haven't seen your name pop up in a while. Good to see you, Hefe. So every time I see Hefe, I think about that show with Billy Bob Thornton. I love that show. Uh, it's coming out in a couple of months. What is it called? Something Man. Something. What was that show? Landman.
You-
Landman. Have you seen it, by the way,
oh
Raleigh?
my gosh, I have. Of course,
Isn't
I'm in
isn't it
Texas.
great? It's great. It's just fantastic, right?
It's pretty wild, I
It's
tell you.
pretty wild. And he's the perfect guy for the role too,
He
you know?
is.
He
He
is. He's
is.
the perfect guy for the role. All right, so look at this, guys. Look, we're halfway through the day right now. We're halfway through the day right now. 20 million, 20 million. Ouch. Ouch. That's bad. That's telling us there's not a lot of institutions right now.
Mhm.
And what environment do we thrive in? Institutional environment. Institutional, okay? Very important. Okay. Number two, I wanted to talk about my stocks. So as of right now, what you need to pay attention to more than anything else is not the stock market. It's um it's volatility. It's this asset right here. Notice it's been going higher last few days. VIX, here, that's actually the right way. But anyway, VIX right here. And what we want to see is it looks like it hit the low. You
Right.
guys should be holding a UVXY. I gave you a UVXY bonus trade about a week and a half ago. You guys should be holding that. But the target here is about right here, 20. Now, if we usually, when we go to 20, that's the peak, and that makes options very expensive. And I'll be talking about that today. I'll circle back to that. And I'll be talking about options for day trading and swing trading. A lot of what I'm going to talk about today applies to both day trading and swing trading. Roger, where do you get the volume from? Right here. If you just right here, the right there. See 20 million? And here's my average. And I just used the 50-day moving average. You could use the 10-day, 20-day. The difference will not be that big, but I like to go longer term. I like to look 2-month average.
Yeah, and you can
And
plot that on any chart. If you
yeah,
just add volume. Yep.
this is something you don't need me for. You could do this on any program in the world. Any technical analysis program will have this. This is, by the way, everything I use for the most part, unless I create it, you can find anywhere and everywhere, including bar chart for free. The reason I do that is so that you guys, it is so that you guys can mimic me and then follow and know for sure that that's the number, and then you can kind of go from there. And you can't give me the excuse, well, I have to pay for it. No, you don't have to pay anything for it. It's free. And if you want to pay for bar chart, you can and get more stuff for it, but you really don't need it. So right now it looks like we're very choppy. We don't have any directional bias. I mean, no directional bias. Look, just back and forth. And these levels are more valuable than they ever were. The ones that Ira asked me why I draw them in the morning. And he was trying to learn and I explained it, but you could see exactly why I draw these levels. If you can't see why I draw these levels, oh boy. Okay. So I wanted to talk about the stocks that I have on my watch list today. Now,
Okay.
in light of the market right now, in light of the overall comment, in light of everything I said today, let's ask folks a question. Would you be focusing more on longer term swing trades or would you be focusing more on uh, day trades or very aggressive trades in light of the current market cycle? The fact that we're in August, the fact that we have Fed data coming out. Okay. Day short duration, tight scalps, day trades. See, my opinion, swing trades. And I'll tell you why. Because we don't have clear directional bias in the short term right now. We also have a lot of data. Scalping is okay. Scalping is okay, but not position day trading where you're holding a day trade for several hours. Why? Because you don't have any trends. There's no trends. There's no waves right now. It's hard to surf. Now, short-term trading is like trying to surf. Swing trading, where we hold for 2, 3 weeks, that tends to eliminate a lot of noise. Okay. Also, when you have more uncertainty in the market and less volatility, you want to go further out. You want to buy more time. Another reason why is if you look at volatility, you will see we're not that expensive yet. We're not in 20. So if volatility keeps going up from here to here and you buy an option today and volatility goes from 16 to 20, that option will may actually increase in value even if your asset is not doing anything. Okay? Very, very important. Remember, implied volatility has all the factors. So right now, you want to be really, really short term or longer term, more 3.5 weeks to 4 months. All right. I did have those levels on the chart and I gave them to you this morning. And you could take a screenshot of this. And you can watch the video from this morning. I literally drew
Yep,
them in the morning for you in real time. Just watch the video. Raleigh will post the link for you guys, and you can watch them yourselves. Just watch this
absolutely.
morning's video. I drew every one of these lines this morning, and you guys saw me do it. I was doing it in real time here. Okay. So with that said, I think right now it's best to go with swing trades. Okay. So I'm going to give you my favorite swings right now. These are all swing trades, and I specifically picked out these for swing. I don't want you to focus on the intraday price action on these right now. I want you to focus on the trend on these. And then I'm going to talk about 90. Then I'm going to talk about 90-10, and I'll answer those questions. And it's very important. Folks, it's a very important session today. And I think it would be very important for you guys to pay attention to this. Okay. Like really, really, really important. So please, please pay attention. Let's see how many people we got. Oh, good amount of people on YouTube. All right. First one is Starbucks. Starbucks is breaking the 100-day moving average. And if you look at it intraday, it doesn't look all that great either. But it's breaking the 100-day. It could potentially go to 85. That's a good $3 move. Notice how it's been completely not going above the 200-day moving average. And now we're at the 100-day and it's breaking down. Okay. Now for this, I'm not going to go through options for all of them, but I'm just going to give you right now because I have a lot to teach. On Monday, we'll start going back to our regular programming, but right now I want to focus on the education because there's so much stuff right now, and we're in August, so I want to take advantage of this time period and try to teach you guys as much as I can about what's going on with the market. So right here, what I would do right now is this. I would be going if I was doing a trade on this, I would be going 29 days out or 36 days out, and I would be buying something around the 70 delta. Okay. That's what I would do for all of the puts we're going to be talking about today. So that's right here, 73 delta, 68 delta, right in this ballpark. I usually say 65 to 75, so it's 70, but you could see it's about $5, and here it's about 560. So you're for an extra week, you're paying about 60 cents. If you want to do it the other way, you can. You can go 8 days out. You could start at zero point 0.5, right somewhere right here. You can buy the 89 and you can sell the 88 as long as you could do this for 50 cents. And you can just keep rolling it over if it doesn't work week to week. It's not going to cost you $5. So those are the two options. And I suggest you take that path for everything I'm going to show you today. That's your template, okay? That's your template for that. Okay. All right. Let me just move this here. I can't see my face in the camera. Can you see me okay, Raleigh?
Let's see. You were there, but I don't see you now.
Ah, there we go.
There you
Ah,
go.
there I am. Okay, that's what happened. For some reason, it turned off. Okay. All right. I just wanted to make sure because I stopped seeing myself. Okay. And okay. So Starbucks, let me continue here. eToro, eToro. Nice trend. The reason it doesn't have the 200 and the 100 is because it hasn't been trading long enough.
Yeah. We don't have the back
So
data.
I
Yeah.
have a good excuse, okay? All right, here you go. All right. I would not now this is I want to show you guys something. Look at how much overlap each bar has. You see how much overlap? Almost every bar overlaps the previous bar. That means it's not a good day trading stock. Maybe a great swing trading stock, but it's not a day trading stock. TP, I'll answer your question later. Raleigh will answer. Raleigh
Yeah.
will ask me that question. I'll answer in the end. He writes all these questions down and then he asks me. All right, let's continue. Let's continue. And again, the same thing I told you about 29 days out, 0.70 delta right here, or the spread if there's weekly options. Okay, so I'll just delete this for now. Next one is SEAT. Okay, nice breakdown on this one too. Remember, I'm not screening for earnings. Why? Because some of you still like to trade earnings. This one right here, OPCH, good for a swing trade. Tech. Oh, no, 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 no. Not tech. TECK. TECK. Tech. Not tech. Not TEC. Another one we were talking about making ticker errors. TECK, not TECH. Okay, just FYI. All right. Kins. Kins. Insurance stock. Breaking down. And Root. Okay. Another financial stock, another insurance stock. Yeah, we will get to your question,
Yeah.
TP.
These are shorts, guys. He's
Yeah,
talking
these are
about
all
puts.
yeah, these are
Yep.
all shorts. These are all shorts. Now I'm gonna do the longs. I know I don't know why, but I've always done the shorts first. So I'm gonna continue doing what I've been doing. All right. Uh RYT. Hold on. You know what? I didn't finish. Let me finish. I got some more. IEX. IEX. I like this short right here. IEX. Not CRM. UPS I like, but it's got to break this level first. And this baby can move. It's got to break 85.71. Adobe I like for a short, and Starbucks, as I mentioned before. Okay, now let me do my longs, okay? ALAB, I really like this stock. This is a potential A line. Let me just put a anchor here. Not ready yet. Not ready yet, but almost there. When it starts trading above this line, it'll be a good A line. BE, I really like this stock a lot. A lot. I wouldn't day trade it. Why? Look at how many wicks it has. The two things that you want to, and this is something you want to write down. The two things that you want to make sure the stock doesn't have when you're considering day trading is a lot of wicks. Three things, actually. Three things. Write this down. Three things. A lot of wicks, a lot of gaps. Okay. Gaps are not good. Wicks are not good. And overlap. Three things: wicks, gaps, and overlap. Let me give you an example. Do you see this stock? So, Raleigh, do you want to hear an interesting story about this
Y-
stock?
Yeah. Let's do it.
So 2 years ago, during Christmas, the stock was making a move. Remember, that's when like the whole that weight loss thing started. It was like a couple of years ago. It was like the stock was just going up, 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 up.
Oh, okay.
Yeah, this is the stock that Majaro, all the that stuff. I don't know all that medical stuff, but the stuff that makes you lose a lot of weight, the drugs that make you lose a lot of weight. This
Ozempa and
company,
all that. Yeah.
yeah. This company is behind it. This company's behind it, and I know
Okay.
actually several people who take it and who've lost over 100 pounds each. So obviously it works, you know. But you see how gappy this stock is. So that's the lesson I learned. That's when I learned not to trade stocks like this because they were so damn gappy. Ozempic, thank you. Yeah, Ozempic, Majoro, all that stuff. So this 2 years ago on a Christmas, I said, you know what? I should not have traded this stock. And after that, I have not traded gappy stocks anymore. So this is a gappy stock. Um, this is a wiki stock. This is a great stock to swing, but you don't want to day trade stocks like this. Too many wicks, okay? And you and I mean, it's not that overlappy, but it's got like right here, it has a lot of overlap. So you don't want to trade this type of stock, but they're great for swing trades. Another stock that I really, really like. I love this stock. I almost bought it yesterday, but again, I don't know if this is the right time for it right now. Volume is looking good. Um, Financial stocks ahead of Powell speaking. I don't think that's a great idea. But I do like this stock quite a bit for a swing trade. I like BZ. I like this stock. Okay, it's an outsourcing stock. It's making a swing high, long-term high. Very nice stock. I like TEM, this stock right here, although this is the definition of choppiness, okay?
Yes, sure is.
Overlap. Look at the overlap in this stock. Look at this stock. Look at this stock, okay? TPC, right? TPC, and then look at and then look at the stock to give you two really really different. This is not, and this is just to show you choppy. I wanted to show you the difference between the two. Okay, Bill says, "Where's the overlap between yesterday's and today's price every day going back as far back as this chart?" Look, Bill, this overlaps with this. This overlaps with this. Now look at this. See how it glides? It flies, and the other one just does this. If you can't see it, if you can't see it, if you can't see the difference between this chart and this chart, then you should stop trading for at least 3 months, erase all your indicators from your chart, and paper trade. It's I'm not there right now, Omar, because that's more for swings. I'm talking about day trading, requirements for day trading. Yes. 1.5 we don't want the stock to be deviated from the 8-day EMA. And I'm actually watching to make sure most of them are not doing that right now. APLD. Kind of choppy, kind of not great for a day trade, but pretty close to the 8-day EMA. There's just not a lot of stuff out there right now, folks. APLD and Newmont right there. I like Newmont. Okay. The moving average has nothing to do with overlap of candles. Nothing to do with each other. It's the personality of a stock. Okay. Now I want to answer a good question. What is the 90-10 strategy? I'm going to show you what a 90-10 strategy is. So somebody asked me that this morning, and I'll teach it to you. So 90-10, we have one 90-10 to the long, and we have one. But if you look this morning, you'll see we had 65. Still not a big number, but better than 3 or 4.
Right.
So let me tell you what a 90-10 is, okay? It's when a stock makes a 90-day high, okay? A 90-day high. And then over the next month, it makes a 10-day low. And on the day that it makes a 10-day low, it reverses and closes up to the upside. So a stock makes a 90-day high. Then over the next month, it makes a 10-day low, but closes that day all the way at the top in the 75th percentile on the upside. So you could see what a lot of these stocks look like. Let me give you an example, okay? And why not all 90-10s are good. A good example would be Palantir. So the stock makes a 90-day high or more. In the next month, over the next month, it makes a 10-day low. And that day, the day that it makes a 10-day low, it closes near the upper end of the range. Like this. So it shows you a reversal. So when I get a high amount of 90-10s, I know that there's a reversal. What's the problem right now? Well, take a look at Palantir and take a look at AMD. They both had a perfect 90-10 yesterday. But what's the problem? Can anybody tell me what the problem is? They both have one problem. Can anyone tell me? With all of this 90-10s that happen, yes. But man, you guys are getting good.
Mm-hmm.
No, it has nothing to do with the 15. It has nothing to do with the American flag. It has nothing to do with anything except exactly what Mr. Rob said. Below 8. That's the answer. No, no. Don't do it. Don't do it. Folks, I'm going to tell you something that a trader, no, actually, the trader had nothing to do with this. I'm going to tell you something that one of my professors told me a long time ago when I was in law school. He was a judge, a federal judge, and he used to teach night school and law school. And he said something to me that was profound. Yes, profound. He said, your refrigerator breaks and you don't know what's wrong with it. And a repairman comes to your house and he listens, he kind of listens and looks around. All right, I'll be back. And he knows exactly what to do when he fixes it. And another repairman comes in and he starts mucking and he starts doing this and that. You know, he has no idea what he's doing. My father had an auto shop. When you're good, you can usually tell by listening to one sound what is wrong. The way to tell if somebody's an expert is how fast they get to the problem. The fastest way to discover if somebody's an expert at something, how fast they discover the problem. It's not the volume. It's not the 15. It's not the previous level. It's the fact that none of them are above the 8-day EMA. So what good is a 90-10 if none of the stocks on my list? And look, and I could tell visually. An 8 would be around here somewhere. An 8 would be around here somewhere. An 8 would be around here somewhere. I could do this just by looking at these little thumbnails. Not one of these stocks had a 180 that did a 90-10 that reversed into above the 8-day EMA. And folks, what have I taught you? If stocks are below the 8-day EMA, do we buy them? Unless it's a gap to green, do we buy them? Do we buy stocks below the 8-day EMA? Well, every 90-10 yesterday or coming into today, well, I didn't even check the second page. Maybe not. Let's see. Nope, 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 nope. But that's not, it's an ETF. Nope, 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 nope. Definitely not. Nope, too low, too low. Already second bottom. Nope, 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 nope. Nope. So I wasn't lying. Okay, let's see the third page. I want to make sure I don't lie to you guys. Let's see. Look at the third page. No. Wait a minute. Wait a minute. PRMI. Hold on. PR. Wait a minute. I wasn't lying, but it's happening right now. But look, this morning, this is today. This is what that bar is showing you this. See this morning? We were at the 8-day EMA. We're just passing it by right now. That's the only stock so far. And once we get to the 8-day EMA, look what we encounter. A nice chop fest for us, right? This isn't like a 1-2 day pullback. This is a good resistance area there. So no soup there. Well, close. Let's see. Maybe there's another one, but I could see them very quickly. I don't need to expand them. Nope. So out of 65 stocks, one now is above the 8-day EMA. And this would show us how it's doing within the last 10 minutes. So this is just 10 minutes delayed. Excuse me, 15 minutes. So none of them, not one. So what does that tell us? Unless we want to buy prim and get stuck with all this chop, none of those 90-10s works. But I wanted you to understand what a 90-10 is. Mm-hmm. And it's very useful. I'll tell you when it's useful. It's very, very useful for capitulations. Okay, everybody likes a good capitulation. So everybody likes a good capitulation. So you have stocks, everything is going great. Some crazy news comes out, like Trump is firing Powell. The market goes down like crazy, and then Trump comes out and says, "Oh, I was just kidding," and the market bolts higher and closes all the way the high above the 8-day EMA on a daily.
Right.
And boom, so you have that tail, and then you have like a bunch of 90-10s. So that would be a perfect example. Okay, now I'm going to answer some questions. I use the 8-day EMA on every daily chart I have? As a matter of fact, on the SPY, I don't just use the 8-day EMA. I also use the 1.5 standard deviation from the 8-day EMA. I have it here. I don't. Uh, Anyway, it doesn't matter. But yeah, I'll show it to you when I'm back in the office tomorrow or Monday. Probably Monday. I'll let Matt rest another day. Yeah, a 90-10 with an A line is a perfect recipe for success. The problem is we've got a bunch of 90-10s, but we ain't got a lot of A lines. As a matter of fact, the only A line we had that I really liked today was this one right here. Right here. That was the only one. Yep, that was the only one. Only one. Okay, so let me answer your questions. Let me answer your questions. I'm going to get into this right now. Okay, why is short-term trading much more difficult mentally? Okay, yes, Michael. Yes, it's there's more to it than just the 8-day EMA. There's three things, but that's the uh, that's the major catalyst right there. All right. So, why is short-term trading much more difficult than swing trading? Like day trading. Why is day trading the shorter your time frame
Mentally. Yep.
mentally? Why is it?
Yep.
Yeah, mentally. Well, probably, maybe technically too, but why? Bodine says because you have to give up your thesis and change on a dime. Okay. Uh, Nothing to do with watching. People love watching price data. No, nothing to do with theta. Why is mentally day trading so much harder? Not Has nothing to do with concentration. Mentally, you guys are giving me good answers. Emotionally, mentally, why is it so hard for you guys to do it? Nothing to do with bigger risk, usually less risk. Okay. Jason Jason said it right there. Fear, you have fear all the time anyway. I'll tell you why. So let me answer your question. When I was a broker, and I'm sometimes I like to give analogies, but I remember my boss when I was a broker. And I was young. I worked. So what I did was I worked for 6 months and then I started my own shop because I learned in the 6 months that there was absolutely nothing there was nothing else these guys could teach me. And I was 100% right. So after 6 months, I opened my shop and then the rest is history. But I'm going to tell you why. Okay. Tim, that is exactly right. That is exactly right. You have to take losses and keep moving immediately because you can't freeze. So when I started being a broker, my boss came up to me and he said, "Look, I'm going to tell you something right now, and nobody will tell you this, but I'm going to tell you this right now. People have a much easier time because." So let me just say this. I wasn't a broker. I started off as a self-service broker. In other words, people would just call me and place trades. I wasn't giving them advice, but I could if I wanted to. And his advice was tell people to slow down. And so I asked him, I'm like, why do you want, I mean, you make less money if they slow down. Isn't it against your interest? Don't you want to make more commission? And he said, let me tell you why. And he was an older guy. This is almost 30 years ago. He was my age back then. He's probably not alive anymore, very old right now. Very nice guy. And he said, I'll never forget it. He said, because people have a much easier time losing money slowly than they do losing money fast. And I said,
Right.
really? I
Yeah.
said, and I was like, really? He's like, yeah, think about it. And you know what? He couldn't have been more right. He couldn't have been more right. If you take $5,000 and you lose $100 a week or a month over 5 years, exactly, boiling frog, exactly. But losing money fast shocks you. It shocks the average person. It shocks you. It paralyzes you. It paralyzes you. And when you're paralyzed, it's very hard to make the next move. And when you're day trading, your next move, you're only as good as your next move. So, and when I interview traders, one of the ways, and I know all of this maybe sound like you're probably like, well, Roger, teach us something important. Believe it or not, what I'm teaching you right now is probably 1,000 times more important than learning about your favorite indicator. I guarantee you this. I'm telling you this after doing this for 31 years. You know why I don't give you more than one or two trades in the pit at a time? Because I don't want to paralyze you. Because most of you cannot handle multiple positions at the same time. It's too much stress. It's too much stimuli. There's too much things going on. Okay? So please listen. When I tell you this is important, it's important. So when I interview traders or when I watch traders trade, I'm not watching at how much money they're making. I'm looking at how fast they can bounce from their loser. If you watch a professional trader, or if you watch Matt, or if you watch me, loser, winner, it makes no difference. Three losers in a row, it doesn't matter. There's no bias. Those losers have no impact on our future. It's very hard for most people to do that when they're beginning. Okay? Exactly. Exactly. It's very, very hard. And sometimes people don't recover at all. So what I don't, so the reason it's much more difficult has absolutely nothing to do with strategy. It has to do because in essence, your patience is not tested as much when you're day trading as you got to be really patient to swing trade, but you don't have to be that patient to day trade, especially if you're scalping. So one of the biggest things is self-control. You don't really have to exercise nearly as much. You can sit there and gamble all day if you will. But the point is, it's getting the losers fast. It screws people up. And most of you who are at least honest with yourself will sit here and say you're 1,000% correct. All right. You're 1,000% correct. Okay. Remember what I'm going to repeat what I taught you a long time ago. And this is interesting, Raleigh. You've heard me say this before.
Absolutely.
Jason says I just had this exact situation happen to me in the past 2 days. SB says you're 1,000% correct, folks. I'm not give. Sometimes I have 10 trades I can give you in the pit at the same time. I don't do that. Why? Because you will mentally crap out, and I don't want you to crap out. You can only focus on one or two positions at a time. I'm doing this because I know how you guys are better than you guys know how you are. Okay. So let me continue. I don't play golf. I live on the 10th hole and I don't play golf. I realized after coming out here, I thought I was going to pick it up. I just don't like golf. It's not for me. Okay. But that's not the point. The point is I was watching an article watching an interview with a professional golfer. I don't remember his name, but he's up there with Tiger Woods because he competes with Tiger Woods. And he said, in my opinion, and in the industry's opinion, I am considered as good or better than Tiger Woods. And I think he won that time or lot, but he was like right up there. And he said, and they said, so what separates you from Tiger Woods? He said, Tiger Woods, I've never seen anyone forget about what just happened better than Tiger Woods. He is he could have just like got the worst thing, hit the worst thing in the world, and like it never happened. And he said, it's so hard for me to do that, but it's so easy for him to do that. Folks, that's what separates a winning trader from a losing trader. That reaction, that reactory moment, how fast that staying in the now is very hard when you're short-term trading. Okay. Yeah.
Mhm.
Matt is amazing at it. He just doesn't care. And neither do I. We just don't care. It doesn't matter whatsoever. All right. Next question. Oh, no. I'm trying to give you the answers for day trading because we're still kind of in the day trading week. Okay. When should you use limit orders and when should you use market orders? Okay. For everything I teach you guys, let me open the door. It's a little hot in here. I'm just going to open the door real quick. Okay. Hopefully dogs won't bark. Okay. If they do, I'm just going to bolt there and close it because it's going to be horrible. But
You
I
let
need
the
a little.
zoo in.
Yeah, I mean, you don't understand what it sounds like. I should just have you guys hear it once. It is horrific. Okay. So limit orders and market orders. Generally speaking, if you're day trading and if you're day trading assets like the SPY, zero DT options on the SPY, E-minis, S&Ps, you should be using limit orders. The reason, I mean, you should be using market orders. The reason you should be using market orders is simply for the fact that these assets are hyper liquid. I've never once heard anybody, I've never once got an email and said, I got a bad fill on an e-mini, add the money e-mini, or I've never seen it before. Mm. Yeah, you're basically, if you're going to use limit orders, you're basically nickeling, you're a penny. You're talking about a penny.
Yeah.
We're trying to get $1. You're looking at a penny. It's just not that much of a difference. So now, if you're using stocks, let's jump back into a different world right now. If you're using stocks or stock options, it's a whole different world. Whole different world. Well, Roger, why can't we use market orders on both? Well, let me show you. Let's say you're trading Microsoft, okay? 315, 325, that's 10 cents right there. That's today's option. Let's go 3 weeks out. And this is Microsoft. This is really good liquidity. But you could see right here, 5, 10, 15 cents. Not a penny, 15 cents. And this is Microsoft. If you go to something like Futu, a second tier stock, your spreads will be wider. Sometimes you got to use limit orders. Or if you're using spreads, you always have to use limit orders. Okay. All right. Really, really, really important. Why? Because you will be screwed if you don't. You will be screwed if you won't. The way I divide stocks, and I want you guys to pay attention to this. Again, now we're talking about stocks and options. The way I separate stocks, and this is just a way I've been doing it for as far back as I can remember, is I usually I know ahead of time because I've been doing this for so long, but you could start doing this yourself. Put stocks into 3 tiers: hyper liquid, good liquid, liquid. This is a liquid stock. It doesn't have a spread of $3, but this is a liquid stock. AMD would be probably a stock. This is a highly liquid stock. Highly, where the spreads are like 5 cents. GE, probably more of a second tier stock. Now, not all of them are in each tier, but I'm just explaining to you that you got to separate stocks. And the lower the tier of a stock, the more you should be pressed to using limit orders. Okay? Okay? Just very, 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 very important. Now, something else. How does implied volatility play into the market? Okay, how does implied volatility play into the market? So let me show you what happens. It's another question we got. So generally speaking, and this is a pretty good idea to speak generally right now. This is all fairly general stuff. When you see VIX, and if you're on bar chart or others, it's $VIX, $VIX. When you're looking at VIX, you should be looking at 2 things right away. Sandra, just look at the spreads. Look at the spreads. Are they hyper tight? Are they like AMD? Are they similar to AMD? If they're not, then it's not an A-tier spread. Use AMD as an A-tier spread. Use Microsoft as a B-tier spread, and use Futu as a 3rd-tier spread. Stare at the spread between the bid and the offer for 20 minutes on each one, and you will never have to ask me that question again. And I'm not being sarcastic. There's just no other way of doing it. But if you look at it for 20 minutes, you'll be like, now I get it. I get exactly what he's talking about. It's like me telling you to take a look at these 3 dresses and see which. It's the same thing. It's you'll see it. Trust me, you will see it very clearly. And then if you want to see, just to show you what we're talking about with SPY options, okay, we're talking 1 cent. So you don't have to work. This is 0 DT and this is 1 DT. 1 cent, 2 cents, market orders. The liquidity is just too damn high. But want to show you guys something. And what I'm going to talk about right now applies to stock options and index options. Okay. So trying to kind of do the shotgun approach here. So if we go to VIX, you could see VIX levels. Generally speaking, there's two levels you want to see VIX: 20 and 15. 20 and 15. If VIX is below 15, then volatility is super, super, super low. And it doesn't make much sense to sell out of the money options if you're a premium seller because you're going to get screwed. The way we do it, we go a little deep in. That makes no difference what the volatility is because I use the actual price. But if you are with other gurus who like to sell far out, the smaller the implied volatility, the cheaper the option. So let's say you're trading AVGO, for example, and let's say that you want to sell an option at 245. If VIX is here versus here, the option will cost, the premium will be almost twice as much. So instead of taking 20 cents here, you take 50 cents here or 60 cents. Big difference, right? A, gives you a bigger buffer. B, you can go further out. You see? Okay, so if VIX is above 20, if VIX is above 20, here's what happens. These babies right here. Now listen, folks, this applies to about 1,000 of you, okay? So listen, okay? If VIX goes above 20 or 20, 30, you're going to start finding that these, where are we right now? 635.50, okay, 635 right here. You're going to find that this $1.28 option or this $3.42, this is tomorrow's. This option is going to be in the next 24 hours. This option here is going to decay, assuming the market stays where it is right now. It's going to decay by $2, by 2/3 of its value. Okay, just FYI, you could tell right now. But what I'm trying to say is, you will find, and we've had experience doing this. We found that this option, tomorrow's option, when implied volatility goes high, you know how much it's going to cost? $8, $9. What? Yes, yes. Do you guys remember, Raleigh? I don't remember. I don't know if you remember when a few months back when Trump was threatening to fire Powell the first time. I don't know. I think he did. And the market just started falling apart till he
It
stopped.
did. It was instantaneous. Yeah.
Like just for not for long. It was just for a
No.
couple of days, And then he's like, no, I'm not going to fire him. And then everything, and then the market went and made a new high. But VIX went. Look, I want to show you this. This right here. It was right here, right there,
Yep. Look
right
at
there,
that.
right there. It was
Yep.
just a few months ago. Because wow, it seems time just flies, doesn't it?
Yeah, it was in April. Yeah.
It seems like it was. I am so bad with time. If you put a gun to my head, I would have said it happened 2 months ago. Okay, but it happened in April. I'm so bad with time. I don't know how those people, when the cops come and ask them, like, what did you do on this day of the week a year ago? I'd be like, are you kidding me? Like, I don't know what I did yesterday. Like, all right. So, yeah, we made a lot of money on VIX calls back then. And I think there's another opportunity here. It's been a while. That's why I told you guys to buy UVXY a few weeks back. But going back to this, when this happened, okay, these options right here, were $9, $10, $9 to $10. So what do you do when that's the case? You could trade E-minis. You know why? They don't have any premium on them. It's like trading a stock. They have no premium. There's not options on E-minis, but you could trade the E-minis. Okay. So wanted to do that. Let me answer one more question for you. How far out should you go when you use options? Well, that's a great question. There's several theories here. Now, I hope by now you're starting to see that there's a big, big difference between things that apply to trading indexes and things that apply to trading stocks. It's not just one size fits all. It doesn't work that way. Remember, we were talking about rotations, energy. I was talking about how you can't, how stocks don't have any and indexes have plenty. We talked about all of that. So, oh, Volt is just doing nothing. So getting back to what I was saying was, um, it's a very different story. So I'm going to give you both rules. When you're trading the SPY, and let's say you're in Trading Zone Live, and we're going to do another class in a few minutes. Let me post a link. Um, I think we have, like, honestly, Raleigh, I don't even know why we're doing it, because I think all the spots are sold out, or like literally there's maybe like a couple of spots left.
I
But
think I
they
think
told
it's
me,
less than 10. They were saying,
yeah,
"Hey,
yeah, yeah,
let's run this promo one more
we
time because we're
will.
looking for 100 seats." Yeah.
We will. Yeah, they want 100 and they're going to limit it. But let me give you the link, guys. Let me give you the link. I'm going to give this to everybody in the YouTube channel right now. Please make your way into the Zoom room if you haven't seen this yet. And if you haven't, you should, because once they're done, we're not going to have any more of this. They asked me to do it again. They actually asked me to do a recording, but I don't like to do recordings. I hate doing recordings because I want to be live here. If you guys have enough respect for me to come here and listen to me talk, then I have enough respect for you to do it live. Okay. That's how I see it, right, Raleigh? I mean,
Yep.
why, 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 why do something pre-recorded if we could just do it live? Plus, I love hanging out with you guys anyway. But let me answer this question for you guys. Okay. Um, let's just answer this question. If you're day trading, there's no real reason for you to trade the SPY unless you're day trading, right? Unless you're like hedging yourself. But if you're day trading the SPY, there's two ways of looking at it. Okay. A lot of professional traders, they like to go same day expiration for the first part of the day. And for the second part of the day, they like to use one DTE, okay? Because by the time lunch comes, these have decayed. Now, there's an upside and a downside. These will give you more leverage. I don't want to say a lot more leverage because these give you plenty, but this will give you more leverage. The problem is this. The problem I find, Matt loves the zero DTE. I like one DTE. The problem with zero DTE is this. You get into a trade and you get stuck in a trade for 2 hours. Does it happen often? Not really. Probably happens 1 in 20 trades, 1 in 15, 1 in 20 trades. The problem is, if let's say you buy the 634, okay? All right. If the price just stays flat and doesn't go anywhere and you're not losing money, your option's going to lose half of its value in 3, 4 hours, even if there's not a big implied volatility difference. Just by the fact that, look, think about this. Look at the 634 today. Right now, it's $4. Look at the 634 that expires today, $2. That's double the price. This option has to this option has to somehow become worth this much in the next 24 hours. So think about if in the next 24 hours and the market only has 8 trading hours, it's going to lose half of its value. How much value do you think it's going to lose if you just sit there for 2 hours in a trade? Like a quarter of its value. So if you're going to do zero DTE, make sure you're like in the trade for like 10, 15 minutes. You understand? Otherwise, just do one DTE because your decay will be here. You won't really have much decay. At least you got a couple hours. You got 3, 4 hours here. Okay. But here you've got like time clock starts running right away. This is like you taking a piece of ice cream out of the fridge. Okay. This is like you reducing the temperature in the fridge by a few points. It's a big difference. Big difference. So if you're going to be eating your ice cream now, there's nothing better than this. So when Matt does his lottery trades, end of day, he always does zero DT because he knows it's the do or die. But these are not. These will still have. If you want to hold your position overnight, go one DT. More brokers allow one DT because there's less risk. It's a little safer. You don't have the margin. Liquidity is just as fine, but you don't have that crazy, how much time do I got to get out of that trade now? I got to get out of that trade now. Okay. So very important. You got to pick the right option. And as far as the strike price, let's see how it's at 635. We would just go to 635. If it was at 634.50, we would go to whichever one. You're not going to get it wrong. Your delta here is not that different. Okay. You're going to lose 20% less or more on the trade, not 20%, 20% more or less. It's not that significant. All right. Now, what if you're doing stocks, Roger? What if I want to buy ALAB when it goes above this level? What do you do then? Well, there's two ways of doing it, and I'm going to finish here, and then we'll start the class. Folks, please, please, please make your way make your way into the Zoom room. Please make your way from YouTube, make your way into the Zoom room right now. And then Raleigh's going to turn it off, so I'm going to just post it here. Please move into the Zoom room. Link above. Link above. Okay, there you go. All right. All right. All right. So if you're doing this, if you're doing these type of trades, if you're doing trades on these, then you have a couple of choices. You can go 8 days out, 4 to 8 days out, 4 to 8 days out. You can start at the 0.50 right here, 180 call, and go to the next strike price and find out what your spread is. Your spread here is $2.50. What are you paying difference here? You're paying 105 here. That's less than half of this. You're good to go. If this is more than half, you go from 180 to 185 right here, and you pay less than 250. And usually you can get that without a problem. If you're in the Zoom room, if you're in Zoom, you guys are already good.
Yep,
All
we're
right.
good.
So that's one way. Or you just do the traditional way and you keep rolling that over because it's going to be cheap. Or you go 3 to 4 weeks out and you go 0.70 delta, which would put you, that's what Richard does. He does 68, 70 delta. But look how expensive this is. 23 bucks. The alternative I'm giving you right here is $1.05. 25 bucks, $1.05. See the difference? All right, let's answer questions, Raleigh.
Yeah, absolutely. So there were some questions that came up earlier. I like this one in particular because it's good and it is. The question was this. So Roger, when you say 0.70 delta, what does that mean?
Okay, that's a great question. That's a great, great question. 0.70 delta, 0.70 delta is the sensitivity of the option to the stock. Sensitivity of the option to the stock, which means I'm just going to reshare my screen in a second here. Just let me
Okay.
grab that. Let me grab this here. Oh, here we go. Man, by the time I'm done with this, I'll know as much as a Zoom tech. All right. All right. So let me answer your question. I'm just getting this prepped up.
Yep.
So to answer your question it's the sensitivity of the option to the underlying asset. So for example, if the delta is 0.70, which is what we like, for every dollar the stock moves, the option will move 70 cents. Sandra, yes, they will be. And Raleigh will give you the link for that.
Yep.
Okay. But if but here's what you don't know. There's a thing called gamma in the option, and that increases the rate of your sensitivity. So as the option increases in price, that sensitivity gets higher and your delta increases and gets closer to 80, 90, 100. And if it decreases from the price of the stock, the gamma unwinds and your sensitivity of the option decreases.
Right.
Okay.
So
All
the
right,
interesting
folks.
thing,
Yes. Yes.
Roger, the way I interpreted that was so many where people were wondering, so Roger, what strike price should I pick? And you were like, don't focus on the price. Let's just look at the delta. And the delta
Right.
will basically determine what your strike price on the entry should be. And you
Yeah,
were
I have
giving
no.
you were
Yeah.
giving
Yeah.
guidance on that. Yep.
Yeah, I don't look at strike prices. I just look at to me the only way to tell what strike price I want to do is by looking at delta. Otherwise, strike prices to me it would be like reading a Chinese menu. I just wouldn't know what the hell to do with it. That's what tells you. You don't just go picking strike prices. The delta picks the strike price.
Yep.
And usually at the money options will have a delta of 0.50. Slightly in the money, like two strikes in, we'll have 0.70.
Okay, so one last question that we had here, and I love this one. This is from Evan. And he said, Raj, if we are certain option pricing will rip higher, wouldn't it make sense to buy no matter what, strangle, straddle, anything, or even UVXY calls, knowing that the VIX will rip ahead of the Jackson Hole speech?
You're yes and no. You're oversimplifying it a little bit. How much of that is already priced into the options? How much of that is already priced into UVXY? You see, it,
Yep,
most of it may already be priced in. And also, what is the rate of decay? What is the sensitivity of those options? I mean, yes, you could do that, but why? There's a much more there's just a better way, you know. Yeah, you could just do all that, but there's a better way. Yes, if the market's crashing, pretty much anything you sell will make money. And if the market's going up, anything you make, but I mean that, that's not the best way to do it.
sure. And just one comment that I need to make here, looking at the chat, folks. Let's stop the conversations about who can hire and fire people, etc. Leave the politics out of this. This is focused. Let's just focus on trading and trading related questions. It's not a general
How
chat.
do we even get there anyway? The firing and hiring.
I don't
I
know.
don't even know
It's
how we
just,
got there.
these are comments that are not appropriate anymore. So let's go ahead and just stay focused on what we're doing here. So with that, Roger, I am going
Yes.
to be closing the YouTube.